Okay, let's talk about recession, since a lot of bank reports I've been reading and annual reports I've been attending have said, oh no, recession fears are out the window now. We're not talking about the inverted yield curve anymore, since it's re-inverted.
Right. Well, the fact that the curve has inverted, I don't think means that recession has been avoided. I mean, maybe it's been delayed a little bit. In fact, typically when you have recessions, the yield curves will normalize prior to the recession. They invert initially because, the Fed doesn't see the recession coming. And then by the time it starts cutting rates, it's too late. So they did cut rates, and that, unwound the yield curve. But I still think we're headed for recession. I think the recession is going to be much more severe than the period that we now refer to as the Great Recession. But yeah, they may have bought some time. The question is, did they buy enough time to make it to the 2020 election?
Peter, let's talk gold now. Last time we spoke, you said that inflation could drive gold to $5,000 with more money being pumped into the financial system in the form of repos. Can we expect the monetary base to expand and push inflation up soon?
Well, it is expanding. I mean, that technically is the inflation. The Fed is doing quantitative easing again, QE4. Now, they don't want to call it QE4, but that's exactly what it is. I mean, there's no difference between what they're doing now and what they were doing when they did call it QE, except when they had QE, at least there was like an official policy to do it. Now they're just doing it. But they've actually assured the markets that even though it's not QE, they're going to keep doing it pretty much indefinitely. And so the Fed's balance sheet is growing, money supply is growing, interest rates are artificially low. So there is a lot of inflation. In fact, the Fed has now officially come out and really changed its mandate, because the mandate was 2% inflation, but now they're saying we need to have higher inflation than 2% because we have to make up for all the years when it was less than 2%, which is all a bunch of nonsense. But I've been saying for years that this is what the Fed was going to do. They can't fight inflation. They have surrendered to inflation. And when the markets figure this out, right, the dollar is going to tank, gold is going to take off. I mean, the only reason that gold isn't already up more this year, because remember, at the end of last year, a year ago today, all the experts on Wall Street and everywhere around the world who are supposedly experts, they were predicting that we'd have 3 to 4 rate hikes this year. Couldn't have been more wrong. We had 3 rate cuts, right? Well, all of those rate hikes that never happened were in the dollar. They were, in the foreign exchange markets. People had discounted those hikes. And when the Fed surprised everybody by doing exactly what I said they were going to do, the dollar didn't fall. And gold went up a bit, but gold would have gone up more had the dollar priced out all those rate hikes that were priced in. But I still think that's coming. I think a big decline in the U.S. dollar is coming. And in that environment, that's when you're going to see the price of gold really take off. And of course, not just in terms of dollars, but in terms of every currency in the world. It'll just make an even bigger move in terms of dollars.
You've been a long-term gold a bull here, Peter. So when you say it's going to take off, what are you expecting for 2020? Let's talk about the first 6 months.
Well, as you said, I've been bullish for a long time. Of course, I started recommending gold to my clients when it was under $300 an ounce. So, at around $1,500, we're up about 5-fold since I started recommending it, about 20 years ago as a professional. So it's still, not a bad return. But ever since gold peaked out in 2011, right, it almost got to 1,900. And so we've been correcting. We bottomed out at the end of 2015 at around 1,000. And, we've moved up about 50% since those lows. So there's no way of knowing. I mean, it's, I'm surprised. I mean, had you asked me 10 years ago, where would the price of gold be today? I wouldn't have guessed 1,500. I would have thought it would have been higher by now. So it's always hard to know. I think the price of gold is going up next year, right? So I want to own it. But I don't know how much it's going to go up. But I do believe that once we really start to take off, I mean, gold could go from 1,500 to 2,000 very quickly. It can go from 2,000 to 3,000 or 4,000 very quickly. Because I think when a lot of people suddenly realize what they should have known for years, and you see the herd all at once scrambling to try to buy some gold because hardly anybody owns it now, the price can go up very, very rapidly. So the key is to own your gold before that stampede so you don't get trampled, as everybody else is bidding it up.
Peter, finally, I want to get your thoughts on Bitcoin. You've been very vocal about your dislike of the cryptocurrency in the past, but everyone is preparing for the halving of Bitcoin. Bloomberg issuing a report today that it will become more mainstream in 2020, that prices should stabilize around $12,000. Have you changed your stance at all on the crypto?
Well, first of all, half of nothing is still nothing. So the halving doesn't mean anything. And, I don't hate Bitcoin because there's nothing there to hate. It's just an abstraction. Now, a lot of people have confused it for gold. They think it's digital gold. As I've said, it's just simply fool's gold. I mean, it's not going to 12,000. I mean, it briefly got up to 14,000 earlier this year. As we're recording, it's barely holding on to 7,000. So I just think that we're in a bear market. Bitcoin topped out about 2 years ago, in fact, a little over 2 years ago. So the price of Bitcoin has been falling for the past 2 years, and I expect that to continue. But I also expect a lot of propaganda from people who are working in the Bitcoin industry that have a vested interest in pumping the price higher, who own a lot of Bitcoin, who need more buyers to come into the market. And they're constantly going to come out with these pie-in-the-sky forecasts of 25,000, 50,000, 100,000, $1 million of Bitcoin, no matter how low the price goes, to try to keep the hodlers on board, to try to, get this momentum. I don't think you're going to see the institutional money. They've been talking about that for years. I don't think that's going to happen. I mean, it's rare that the institutions are the bag holders for the mom and pop retail investors. I don't think that's going to happen. I just don't see portfolio managers, especially, endowments, pension funds. I don't see them gambling on Bitcoin with other people's money and then being held responsible for the losses. So again, that's just wishful thinking to try to drive this narrative that this is going to be adopted as an alternative to gold. It's not. I mean, the original purpose of Bitcoin was to be an alternative to dollars or euros. It was supposed to be money. It was supposed to be used to buy a cup of coffee. Well, because that isn't possible, that's not practical for a number of reasons, and it doesn't happen, they tried to reinvent it as, well, it's a store of value, it's digital gold. But there is no value in Bitcoin, so you can't store what you don't have. I mean, gold is a store of value because it has a lot of value. And gold can also function as a medium of exchange. It's not functioning as one now, but it has in the past, and it could again in the future. But Bitcoin has never really been a medium of exchange. It wasn't in the past, and it won't be in the future. So they're trying to, put lipstick on the pig and claim it's a store of value, but there's nothing to store. So I just think it's going to keep going down. And I feel badly for people who make the mistake of correctly identifying that there is a problem with fiat money and that they need to hedge against inflation, but then who make the mistake of thinking that Bitcoin is going to provide that hedge. It's not going to do it. It's gold. And I know all the young people think guys like me are just a bunch of old fools who are out of touch and don't get the technology. What I'm going to say is all the young people are naive and they don't have the experience and they don't have the wisdom, and they're just falling for basically what amounts to a fraud.
Peter,
yeah.
No, I was going to say, you certainly have not lost your passion on this topic. I feel it. And I will make sure Max Kaiser gets that message.
Yeah, I saw your interview where he called me an imbecile and a moron and all kinds of things. And, I don't necessarily insult the intelligence of the people who, are buying Bitcoin. I mean, I think there's a lot of smart guys that are buying it, but unfortunately, they're not smart about investing. They may be smart about a lot of things. People who got into Bitcoin a long time ago, I mean, Max bought some Bitcoin a long, long time ago, and if he's smart, he'll sell. But a lot of people confuse brains for a bull market, or in this case, brains for a bubble. But if you did get in early, then get out, because if you don't, then none of those gains are going to matter when they've been lost.
No, I thought you handled that really well. Peter, great conversation here today. Really a lot of good thoughts. Thank you so much for joining us for this Outlook series. I appreciate your time, and I'll see you soon.